You're watching the latest financial news with VEVOFX. It's Saturday, the 2nd of March 2024. So, the enthusiastic investors of crypto, especially Bitcoin, can't hide their joy as their investment is set for new heights. Bitcoin surpassed the $60,000 mark on Wednesday and achieved a milestone not seen in over 2 years, propelled by a surge of capital into newly established US spot Bitcoin exchange-traded products. This surge has driven a remarkable 42% rally in the cryptocurrency's value this month alone, marking its most substantial monthly gain since December 2020. Currently trading at $61,272, Bitcoin's ascent represents an 8% increase and marks its highest valuation since November 2021, when it nearly reached a record-breaking $70,000. Furthermore, Bitcoin is poised for its most significant weekly gain in a year, reflecting an impressive 18.5% surge since February the 21st. The bull run of the crypto market is following the explosive run of the stock market in January 2024, where the Nasdaq, the S&P 500 and the Dow Jones made new all-time highs. Bitcoin's upward trajectory is buoyed by the sustained influx of capital into the latest spot ETFs, coupled with optimistic projections surrounding the forthcoming halving event in April, and of course anticipated interest rate reductions by the Federal Reserve in June. Now, interestingly, while the impact of spot ETFs is felt in the crypto world, the same cannot be said for the Forex market. With the upcoming release of the Core Personal Consumption Expenditures, that's the PCE price index, the market anticipates a monthly uptick of 0.4% for January, reflecting a more robust pace compared to the 0.2% increase noted in December. Well, this index, excluding volatile food and energy prices, holds significance for the Fed's positioning on inflation. Projections suggest January's core PCE to expand annually by 2.8%. That's slightly lower than December's 2.9%. A stronger than expected core PCE reading could affirm expectations of a Fed policy pause in May, potentially boosting the US dollar and exerting downward pressure on the euro against the dollar pair. Conversely, a softer than anticipated increase in core PCE may not revive rate cut expectations for May, but could improve risk sentiment, supporting a potential uptick in the euro against the dollar. And from a technical perspective, the euro-dollar pairing faces a pivotal level at 1.0820 to 1.0830, with failure to stabilize above potentially targeting 1.07 on the downside. Conversely, confirmation of support at this level could see bullish momentum targeting 1.09 and subsequently 1.095. So, during Thursday's Asian session, the Japanese yen surged as aggressive buying activity ensued, fueled by a warning of potential intervention and hawkish remarks from the Bank of Japan board member Hajime Takata. This surge was further propelled by a general downtrend in equity markets, bolstering the safe haven appeal of the yen. Concurrently, a modest weakness in the US dollar pushed the dollar-yen pair to its lowest level in over a week. Despite this, spot prices managed to rebound from the psychological support level of 150, with traders displaying hesitancy in placing significant directional bets ahead of the release of the US Personal Consumption Expenditures, the PCE price index. Now, this crucial inflation data from the US holds significant sway over future policy decisions by the Fed, consequently, of course, impacting the trajectory of the dollar and offering fresh momentum to that US dollar-yen pairing. So, the US dollar has started facing huge potential resistance after hitting the high of the year, with large speculators teetering on the edge of flipping to net short exposure. While its year-to-date rally nears trend resistance, approaching its second consecutive week of drop without impending correction raises sustainability concerns, hinting at limitations on the upside, despite optimism from those asset managers, which of course may signal a turning point if inflation expectations and that PCE does not favour the dollar this week. So, as for the dollar index, well, that's now on a decline, currently trading at $103.86, dwindling by the bullish sentiment after the CPI release 2 weeks ago. And that, of course, made the dollar jump higher to a new yearly high and entered a resistance level. But as for gold prices, well, they continue to exhibit a positive bias for the second consecutive day on Thursday, although the bullish momentum appears subdued, with the precious metal still below that $2,040 to $2,042 resistance zone as the European session begins. Investor sentiment turns cautious ahead of the release of key US inflation data, with a slight decline in the US dollar providing some support to the safe haven asset. However, the upside potential remains limited due to increasing market consensus that the Fed will maintain higher interest rates for an extended period. So there you have it, that is it. Do let us know your thoughts in the comments below, and of course if you'd like to keep up with the latest Forex news, do click on that subscribe button, and why not give us a like whilst you're at it. But in the meantime, thanks for watching, and we will see you next time. This has been the Quick News brought to you by VEVOFX.